Good morning. It is Saturday morning, March 18th, 2023. This is Ron Brown. I'm going to do a short market report. I just run through it using HGSI only. As usual, any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. If you're not an HGSI user, you should be. And you can get a free 30-day trial just by going to highgrowthstock.com. And you'll see the link at the top of the website. Now I'm going to try to do this very quickly just to show you don't have to spend a lot of time analyzing the market. I'll start in the designer, and in my market analysis user groups I'm going to click through, and then I have to find the correct views, so I'm going to go to the top-down views. For market analysis, just click on number 1 and it's going to bring these up. I'll sort on the raw combo, which is the percentage price change one day. For those of you who don't know what the combo ranking is, it sorts based upon certain criteria, and this one just has a single criteria, the percentage price change one day. And if you go down here, you'll see what happened. And if you look here, you'll see the Ultra VIX, the UVXY, was up 14.8% yesterday, but down 7.9% for the week. Bitcoin Investment Trust, we don't have Bitcoin in HGSI, but this will substitute, and it tells you that it was up 9.8% yesterday and 25.7% for the week. That's because of the banking crisis. Money is flowing into cryptos. They evidently think it's a safe haven. So that's what we see right here. And then all the other indexes are down. But if we look at the 5-day of the SOX compared to the 1-day, you can see it was up 6.9% from the beginning of the week. Oh, I'm sorry, this is the beginning of the week column, not the 5-day column, which is over here. And up 5.5 for the 5-day. This is beginning of the week. Crypto is actually up 37.4 over a 5-day period. This is from Monday morning. The 5-day is from last Friday. So that's the difference between these two. Now here's the percentage changes since the beginning of the year. You can see that crypto is way up there. If I resort this, it goes to the top, but the SOX is actually up 21.8% and up since the beginning of the week, which was last Monday morning, 6.9%. And over 5 days compared to last Friday, 5.5, just down slightly. So obviously the leadership this week was in the semiconductors, followed by the NASDAQ. I'll sort on the, this is Monday morning, since the beginning of the week, and you can see the NASDAQ 100 and the NASDAQ composite and so on. Where was the weakness? Well, that's the UVVX, but the New York, since the beginning of the week, the NYSE was down 2%, Dow Jones down 1.3%, and so on. Now, what I want to do is I want to bring up the NASDAQ composite, and I want to go to my market charts, and I'm going to use this chart, which is chart number 1. Get this out of the way. I'm going to zoom in with the alternate 1 key, and you can see that there were 4 strong days after a gap down early Monday morning, and then buyers came in selling before the end of the day, and then a gap open on Tuesday, gap down on Wednesday. But with the white candles, it tells us there was buyer support in there. And then on Thursday, big up day, it looked like this market was going to take off, and then more bad news on the banking sector on Friday. So we have a spinning top with a VPA flag, which is high volume down bar. After an up move on high volume indicates weakness. And look at this volume. Yes, there were a lot of options that expired yesterday, but heavy volume days. So the opening gap was down slightly, traded up, traded down, and ended up as a spinning top, which means indecision. It's a tough call on this market right now. Now I'm going to run through some other charts. I'll go to chart number 2. This blue line shows the comparison of the relative strength of the S&P 500, and you can see that the composite, the NASDAQ, is where the strength was, much stronger than the S&P 500. This is the same chart as the first one, but it shows the advanced decline line. That's 1B. 2 is new highs versus new lows. You can see the new lows surpass new highs. There's that volume. You can see that the fan is kind of setting up, but it's not in the proper order yet. The market's held up actually pretty well. It doesn't seem like it, but compared to down here, it hasn't been too bad. And then here's the advanced decline line, chart number 3. It just shows that the advancers versus decliners were stronger. Their decliners were much stronger than the advancers. And remember, this is the NASDAQ, and it was stronger than the S&P. If I go back up to chart number 2, you can see that this blue line's going up, so it's been outperforming the S&P, and even though it's been outperforming, it's still weak. So this is all relative here. Now looking down here at the bottom, you can see that the decliners led the advancers on Friday, obviously, and the same thing with the advancing versus declining volume. Here's the new high, new low, the ARMS index, which I really don't pay much attention to anymore. Looking over here to the left side, I'll get my arrow key out. You can see the NASDAQ's up 11.1% since the beginning of the year, but it's down 20.6% from the 52-week high, up 15.2% from the 52-week low. Look at this volume yesterday. I assume a lot of that was due to options expiration, but it was a heavy volume day which generated this negative EPA flag, but it's really a tough market to call. I'm not going to look at any other NASDAQ charts here. Okay, now I'm just going to drop down to the next one, major market ETFs and ETNs. I'm going to skip down to top-down process and look at the ETFs here. Got quite a few of them in here. I'm going to sort on raw combo, which is the percentage price change. One day there's that UVXY again. Gold has been strong. Look at this. High volume, wide. These are Wyckoff indicators. Close is high also. Let's look at the chart, and I'm going to bring up a different chart. I'm just going to go down to these Williams bar charts. I call these Williams charts because they're named after Tom Williams. If a stock or ETF or whatever security closes, if it closes higher than the prior day, it's going to be green. If it closes the same, it's going to be blue. If it closes lower than the prior day, it's going to be red. So it's just easier to see trends with this naked chart. You can see that. Going to bring up another charting window. Downsize this a little bit. And let's just put up a weekly bar chart here. Same principles, just weekly. You can see the clearly see the trends, and then where there's potential reversals and so on. So just for looking at naked charts, I didn't want to do that. I like to look at these. I can flip through them pretty quickly. Now if you look here, this is very high, wide, and high. That corresponds to this information up here on the daily chart. So a strong move. If I go back here to this one, it says very high above average and very high. You can see the bullishness in that candle. On this one, high above average, but the close was down. This is green, even though this would be considered a weak candle. It's green because it closed higher than the prior candle, or prior bar, I'm sorry. So I'll bring this to the front. Silver was up there, gold, treasury bond, the TLTs were moving up in anticipation of lower rates, or rates not quite as strong as they have been, pushing them higher. But you can just I'm not going to go through all these. You can see where the strength and the weakness was. Look at the natural gas fund. It, even though it's been a brutal winter, natural gas has fallen dramatically. It wasn't reflected in my gas bill, but anyway, you just get a really pretty decent feel for the market looking at these ETFs. Next, I'm going to quickly go into the spider sector ETFs. And looking at this, you can see that everything was down, but the tech sector was only down 1/10, and you can see beginning of the week in 5 days up. That's where the strength has been. Where's the real weakness been? In financials, obviously. If I bring up the financials charts, you can see how dramatically they fell off on the daily and the weekly charts. Look at the volume here. It's just tremendous. The fear, this is when fear takes over, and people, traders, investors, they just want out. Real estate sector wasn't much better. Now let's compare that to the tech sector, and look how it's held up on the weekly and the daily. You can also bring up the ranking module. I've got this set on percent change 1 week, and that goes back to Friday. So if I'm going to bring this up and point out this 5.664, I'm going to the weekly chart. If you look down here in the corner, 5.66. So this bar represents what happened since last Friday in the ranking module. That differs from the warehouse module from the beginning of the week, which means Monday morning. So this bar represents this in the ranking module. Now I put the SPY in here, which is a representative of the S&P 500. So everything above this in the sectors outperformed the broader SPY. So once again, technology, communications, and so on. Let's just go down. Oh, I can't do that. I've got these spider sectors up here. If I wanted to look here, I'm going to go up to the reference groups and industries and sectors. Here's the sectors. I'll take this filter off, hold my shift key, and let's just put these in here. And the technologies index. You can see this is giving us a different look here because of the weighting. These are indexes that are built by HGS, and I use market cap weighting in my weighting process. Let me show you. Preferences. Global index options. I use 104 weeks market value weighted index rather than equal dollar weighting, and that's why I use over $5 only, and that's why we get a little different look here. But I'm going to use the tech sector, go into the ranking module, and now notice the tech sector is on top when I'm using the ranking module. This is where I wanted to go. Now I'm going to change to the index. You can see that it went down into the tech sector. Actually, if you do this, and then if you hit your home key, it takes you to the top of the list, and then this shows me the stocks that were up the most, and there's a lot of little stocks in here. But this is percent change 1 week. I don't know what this stock is, but you can see it's a little cheap stock. I really need to put a $5 filter on here to eliminate everything that's not in the index. See if I can do that quickly. Look under group inclusion reports. Here's a $5 filter. Now see, it got rid of everything but the stocks that are $5 and above and assigned the industry group. And this stock, MicroStrategy, is closely, they own a bunch of Bitcoin, so when Bitcoin moves up or down, this this stock moves too. But anyway, you can use the ranking module, or you can use the warehouse module to go down and look where the strength is. Now, I'm not going to get into prospecting this. I did another video yesterday, and it's about prospecting with the undercut and rally scans. You should take a look at that. It's about 35 minutes, but I think it's pretty useful. Now, I want to do one more thing here. I'm going to move in. Actually, I'm going back down to the market analysis user groups, and I'm going to go into broad market indices, and I'm going to click through, and I'm going to click on the quick pick, and I'm going to go to top-down scorecard views for HGSI index analysis. Click on number 1, and it shows us these are market cap weighted 2 years, and this shows once again pretty similar results here. I mean, the with market cap weighting, it's up 7.8% beginning of the week and 6.5 for 5 days. And these are the actual indexes which are built by HGSI. Now I'm just going to use the S&P 1500. I'm going to bring it up. And then I'm going to go into some different charts here. These are my HGSI index charts. I'm just going to show you a couple of them. This chart shows the percentage of stocks within the S&P 1500 that are above their 20-day, the red line's a 50-day moving average of the blue line, and you can see the percent above the 20, 30, 50, 200, and of course here's the index. If you use your alternate I key, it'll bring this up, or you can click on this icon up here and it'll give you the actual numbers. So above the 20-day, only 15.14%, above the 30, 13, 23, above the 50, make sure you're using the blue line, 17.2, and above the 200-day, only 37.1. Obviously a weak market. Alternate C, we'll put the crosshair on. If you go up here and look at where the market was strong, I'll use this right here, you can see that the percent above the 50-day was 84.47, and it's been moving down. Had a uptick here on all of these. Then down here at the low, we had this rally this week. At the low, only 6.27 were above the 50. So this shows you the strength of the market. When it falls, when the 200 gets down here below this red line, that's generally not a real good sign, and you can see that it's down here now. The market's obviously oversold, and we always expect a reversion to the mean, but you have to be careful because we don't really know what's going to happen with this banking crisis. Now I'm going to go to my number 6 chart, and this is, I've shown this before, red bar down here in this line is a sell signal. A yellow bar is a potential buy signal on this candle here, and then we haven't had another sell signal yet because the volume point of control with this 1-day change did not change back to red. So this is just a guideline. It works pretty well. I've used it for the years. Like, look right here, there's a buy signal that started this run. Next day a sell signal confirming buy, 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 buy. So just it's worth a look. And then let's look at one more chart on this. I'm just going to use chart number 8 with the advanced decline line, and you can also see the internals up here for this chart on the day. Down, percent declining on the S&P 1500. That's where I am. 93.39, only 6.2 up. So it shows you how weak it is. This is the AD line right here. Now I could show you a lot of other ways you can analyze with HGSI, but I think you get the picture. Market's weak, it's oversold. The strength has been in the the tech stocks and the NASDAQ 100. The comp has been outperforming the S&P 500, but they're both weak. But if you're looking at relative comparisons, that's what you would see. Now, these are my broad market indices. I'll finish off by clicking through to the ranking module just to show you what I'm talking about. The SOX, this is percent change 1 week from last Friday. The SOX is on top. Utilities for safety, 100 stocks and indexes is up here. Now, when I change to the index group, what you're going to see on top, and I'll just hit my home key, you're going to see tech stocks on top, ADM, and mining stocks, Microsoft, Nvidia, Intel, FedEx, reported earnings, good earnings, Amazon. These are the top 100 stocks in the index, in the major indexes. I stripped them out, so you can just use this to see where the strength is. Okay, that's one a little longer than I wanted to, but that should give you a good idea how you can really get great insight with HGSI to analyze the markets. I'll try to do these weekly if I'm in town. I'll try to limit them to 20 minutes. I'm a little bit over, but thanks for listening.